What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. We're going to be going over the best options to play for AMC, as well as what AMC needs to do in order for us to see a pretty big squeeze or increase in price next week. So this Friday, June 16th, June 18th rather, we are watching AMC to close over the $60 price point, because that's where the majority of the options are going to be expiring at. As we can see in the AMC Options Summary, the dominant strikes are going to be the $40 strikes, $55, and $60 strikes. So if we can see AMC close above $60, all of those call contracts are going to be expiring or exercising, and there's going to be a lot of gamma going into this stock. So we will potentially see a nice little gamma squeeze, a nice run up next week, starting Monday. So if AMC is about to close above $60 on Friday, I would say now or that time would be the best time to jump into the stock in preparation for Monday. So I will definitely be watching closely before market closes on Friday to see if AMC will close above that price point. But let's see the options chain and what type of options we should be playing. And of course, on Wall Street Bets Chatter, AMC is still one of the most talked about stocks on Wall Street Bets Reddit forum, as well as Twitter being the most talked about stock in the market for today, as well as in the previous weeks. So there's a lot of talk about AMC, and there's a lot of eyes on AMC to see when it's going to squeeze. A lot of people are buying shares. I would highly recommend buying shares rather than buying calls. Calls are very risky, and on flat weeks like this week has been pretty flat for AMC. A lot of the call holders are going to be losing a lot of money. As we can see with my 145 strike calls, I'm pretty much going to be losing that entire investment, but I only bought one call for $95, so it wasn't too much money I was risking. But buying these calls, if the stock does happen to skyrocket, you're going to be seeing incredible returns. So it's basically lottery tickets you're going to be buying. So if you want to buy another lottery ticket, you could either do the June 25 or the July 2nd. July 2nd could be pretty good to give yourself a little bit more time for AMC. The contract will cost you almost $400, somewhere between $300 $400. If you want to do the June 25, that's going to cost you maybe $200, just under $200 for that 145 strike lottery ticket. But of course, if AMC skyrockets, you're going to be seeing huge returns. But if it stays flat or just rises a little bit, you're going to be losing money on that call option. So calls are going to be pretty expensive. Everyone's buying calls. I would highly recommend shares over calls. And even if AMC skyrockets, you're still going to be making a lot of money off those shares. So I'm going to be mostly buying shares as well. And of course, my favorite strategy would be selling cash secured puts, which would help you get shares at a lower cost basis. So something like a June 25 or even a June 18th expiration date, you could sell a call or sell a put on. So if you're fine with owning AMC at like $50 a share, you could sell a $50 cash secured put for $200 a premium, and that only expires in 3 days. So you're making $200 if AMC stays above $50, and that's a pretty big chunk of profit, assuming with how stable AMC is at this $50 price point. If you want to be a little bit safer, you could go down strikes a little bit, maybe the $45 strike for $76 a premium. Of course, if AMC goes under your strike price, you're going to be having to buy 100 shares at your strike price. So if AMC goes to $44, you're going to have to buy 100 shares at $45, and you're probably going to lose a little bit of money. But the good news is you're buying the dip, and if you just outright bought shares right now, you'd be losing a lot more money. So cash secured puts is a lot safer, but the downside is the profit potential is limited. You only can make the profit on the premium. So June 25 also has some really good premiums. Please don't really buy too many options. It's really inflated, and the implied volatility is very high, so the premiums are going to be a little bit high. So option sellers are going to be pretty sitting pretty well. So I have a $41 strike expiring June 25 for I sold it around $400 of premium. Right now it's $230, so I made $170 of profit. But any of these strikes, $40 to $45, even $50, you can collect a pretty good amount of premium in just a week or two. A few $100 just for $4,000 to $5,000 of collateral. But obviously you need a bigger account. But if you're planning on buying 100 shares anyway, this could be a strategy that you may want to look into. But that would be my recommendations for how to play AMC. I highly recommend shares. If you don't want to do shares, then you can do cash secured puts, and if you want to be a little bit risky, you can do that 145 straight calls expiring either June 25 or July 2nd, and that would be a very nice lottery ticket. Obviously, there's a high probability of losing, but if AMC does hit big, you're going to make huge returns on that contract. But that's about it for this video. If it helped you any way, please leave a like, comment down below what your positions are in AMC, what your thoughts are, and what your predictions are that AMC is going to do in the following weeks. If you're new here, please consider subscribing. It helps out the channel a lot. Thanks for watching.